Welcome to the Strategic Insight Global Research Update. I'm here with Miao Hu, one of our senior research analysts in our New York team. So we're recording this today from New York. You will see it also from London, from Hong Kong, from around the world. What we did was this week publish a new study called David and Goliath in Global Asset Management. So the idea behind it was our comments to a few reporters on the new trend towards investment boutiques. When we looked at the data, it turned out that since the crisis, you've seen a lot of growth for small investment managers, not only doubling their assets or their size, but oftentimes growing it 5 times, 10 times over in the last couple of years. And it's a growing trend. It's a trend that we also pick up with our blockbuster discussion. So blockbuster flagship funds, where we see concentrated flows to a few managers and to a few products, prompting us to look over the weekend at which kind of investment boutiques are winning. Is there a bias? What kind of bias? Is there regional bias and investing bias? And Miao, you looked at the data. Mm-hmm. Is there bias? Do we find these boutiques anywhere around the world, or what did we see?
Well, actually, the concentrated flow into a few flagship funds for the boutique firms is a global trend. We found successful stories across Asia, Europe, and US. And there are several firms we look at closely, including Double Line, Pacific Heights in the US, Blue Bay, Carminark for Europe, in Huashang, a Chinese boutique firm, and a value partner for Asia.
So, in a way, when you look at the data, it's global.
Yes.
No worries if you don't know all of these firms. We talked about some of them. Mm-hmm. Some of them really are pretty unknown. They just happen to grow their assets significantly. But it's something that, when we looked at these names, there were some surprising names. Mm-hmm. Right? Yeah. Now, Carmignac we wrote about quite a bit. Mm-hmm. Other firms we wrote about a bit as well. Was there a bias then, if there's no regional bias? Was there a bias on the investment side? So was it in one asset class, or where was it?
No, actually. We found successful flagship products for those managers across different asset classes. For instance, for Carmignac is mixed, balanced portfolio, and for Blue Bay is more fixed income driven. For U.S. companies, Double Line is mostly the mortgage-backed securities. For Huashang is equity, and value partner is China equity as well. So, yeah.
So don't think that only mortgage-backed securities are winning in the U.S., but we gave that as an example right. To talk about that there's variety from the origin of the firm, as well as variety from the investment objective or category or asset class, really. Now, we established it's a global trend. Right. We established it's across asset classes, so you can really win anywhere if you're good at it. How do you win? What are the most important criteria? Is there anything that is common between those managers?
They do have a lot in common. One thing we found, they do have clear investment process. They do have a clear fund positioning. And another thing is the managers tend to be visible, and they tend to deliver a very clear, timely marketing messages, and they are also approachable. For instance, Huashang in China, their fund manager, his name is Sun Jianbo. He was chosen as the best performing equity manager in 2010 in China. They also opened up a Chinese Twitter-like microblogging site. It's called Weibo in China. They do deliver marketing messages constantly there.
So that's one of the trends actually that we talked about with Bill Gross. Clearly Bill Gross and PIMCO it used to be a boutique when nobody wanted to invest in fixed income on the West Coast many, many years ago. Now it's the biggest fund in the world. But Bill Gross was the first one to have his investment outlook on Kindle, right. in Spanish, and in all kinds of different facets. So, and in a way, when we started doing panels on the social media aspect and communication delivery in a new web digital environment, it wasn't all that serious. But now we see that actually for boutiques, to get the message across, they use a wide range of communication tools. They're also very good in terms of access. So we have one company also that we look at. These are not the only firms we look at. Skagen in Scandinavia. These Scandinavian firms actually have been very good about communication. And what they do is Skagen TV, so for the Kontiki fund and other funds, and we touch from a data perspective on these flagship funds, they talk in that TV segment on a very regular basis to their investors and to clients, where investors on webcasts can send in questions to the portfolio manager and they will answer it. That all goes hand in hand with our in-depth research studies, where we talk a lot about the needed access to portfolio managers. And clearly one advantage of if you're small, and when you're small, you're still willing to talk to your clients, more maybe than once you are the biggest fund manager in the world. So at the end of the day, we see that it's a global trend.
Right.
It's across asset classes. So while that's very different, there are commonalities in terms of what they deliver and how they deliver it. We will give you the Goliath aspect in our next update. So we had the Davids of global asset management. Clearly we touched on a lot of the bigger firms in the past, but we will look at Goliath in global asset management soon. Thank you for watching the Strategic Insight Global Research Update. My name is Daniel Enskert, and I was here with Miao Hu, New York-based senior research analyst for this piece.